morning and welcome, Patriot Radio News Hour. Yeah, it's Friday. We've made it to another week of just absolute, well, I don't even know what to call it. I want to say it's insanity, but again, it's just kind of the world that we live in. Everything is upside down. Right is wrong. Wrong is right. Inflation. We got more data today. Of course, it doesn't even track inflation. That's the best part. We just make it up. We kind of do, but we really don't do. But this one today, like I said, we've got a lot of data. Everything's going to be data dependent, and what is inflation going to do? Is it going to go lower? Is it going to stay lower? Is it going to go back higher? That's really the big debate in all of this. But our toll-free number, I'll say this: gold and silver had a great day yesterday, and you're like, what? What are you talking about? They got their ass whipped. Not really. We were hoping, we want new lower lows. We got it right where we were hoping to get it, right around that 1950 level, that $24 level for silver, $1,950 for gold. And today, back strong once again. Gold's up, silver's up, the Dow's up. The Wall Street had a bad day yesterday. We kind of figured that. But again, I think the overall trend is the same here. 800-951-0592. That's our toll-free number. We've just been having incredible opportunities in the gold and silver market this summer that we haven't seen in the last several summers. Because normally, if you've done this as long as I have, like a lot of things, there's patterns, right? There's patterns for gasoline. There's patterns for retail sales, right? And we get all of that stuff. One of the reasons why they say we need to have seasonal adjustments is they don't like the pattern. Why? Well, because the patterns are up and down, up and down, up and down. And they're like, well, no, we want it to be, like a straight line, and that's why they do all that stuff. It's idiotic, right? Like we're that unintelligent that we can't understand it. But again, I digress, that we haven't seen that pattern in the last few years. So it's kind of nice to have it back because historically, the summer months has been the months, hey, that's when you want to buy gold. Because normally what happens is August, September, October, and into November, gold runs, silver runs. And then the pattern would go right near Christmas. It'll come down again. Why? Because, well, people need money, right? I got to buy Christmas gifts, or I got to do this or that. So you'll get some selling, and then gold and silver will weaken. And then January, February, March, right, Jason? Gold and silver go up again, right? This is kind of more in the pattern. I hope people take advantage of it. Don't let this go by, because unfortunately, I really think towards the end of 2023 and heading into 2024, things are going to look a lot different than it looks right now. We're going to have a lot of answers to things that right now we're not sure what's going to happen.
Yeah, and things are currently moving. There's this is a market that's in flux. It's happening, I think, a lot more slowly than people are wanting it to move. I think people know that there's going to be a recession. I think they know there's going to be an economic downturn. And I think a lot of people, Joe, when you put the Band-Aid on, the wound, so to speak, people want to they want to heal quick and they want to rip it off and get back to what they call normal, right? And it's just not happening at the speed that people are forecasting. And I think a lot of people are more educated about this stuff and are trying to forecast, understand what's going on. And every time there is a market crash, it's not the same as the stuff that's happened in the past. There's always different factors, and so it's going to make it differently, Joe. So, yeah, it's happening. It's happening. It's just the timing of it. Just like you said, what's the information going to be? What are going to be the decisions made to change it? How will the decisions being made change the outcome of what's getting ready to happen? And that's what we're doing day to day, Joe. We look at it. We prognosticate what we think is happening. We make some some light prediction based off what we know, but no one really, I think, has the full 100% answer as to how it's going to go down. Although there are people that have control over the machine, so to speak.
Yeah, and again, we'll see how it all works. We got another inflation data point today, the PCE. And then, of course, this is one of those historically, the Fed's like, oh, yeah, this is our favorite one. Why? Why was it your favorite? Well, it's the lowest one. But now they have the core, the PCE core, and now the super core. But just headline here, 4%, and actually 4.1%. So inflation double what they said they want it to be, and yet somehow viewed positively. The question really is this a pause, right, in inflation, right? Is inflation going to make a comeback, or is this going to be, hey, we're on the path, right? We're not going to get to 2% this year, but we're on the path, right, Jason? Hey, we're going to see lower inflation. And I know this, some big numbers are rolling off. This was a June number. Last June, we had some really big numbers. Last July, we had some really big numbers. So the year-over-year numbers, this is their best chance. June, July, August, this is their best chance at getting these lower numbers because some real high numbers come off the board. We'll talk about that and a whole bunch more. Patriot Radio News Hour. We'll be right back after the break. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Friday. A quick look in at the markets. The Dow's up 200 points. It was down almost 300 points yesterday. The S&P up 44. The NASDAQ up 247. I mean, think about this. All is well. All is well because the Fed's favorite fake inflation number is 4.1%. And again, like I said, I think there's a good chance, at least for next month, that we can get a number, dare I say it, in the threes. I think that is going to be possible. The 10-year note hovering right around 4% yesterday was over 4% right now at 397. Crude oil was above $80 yesterday. Right now, $79.82. Gold's up $14 here, $1,960. Silver up another 10 cents here, almost $24.50. And Jason, if you're like, man, I don't know, look, I'm watching the melt up in the market. And I'm listening to Joe, and I'm listening to Jason, and I think everyone's like, okay, is the shoe's going to drop? When is it going to drop? Some people are out there, especially a lot of the Wall Street guys. Oh, no, the shoe's not going to drop. It's not going to. Please don't believe that. Please don't. That's like buying gold from Fox News, right? That's the same thing. You want to get ripped off and do that, follow that kind of nonsense. But I digress. That's for another show. I'm going to tell you right now. You got to focus on banks. Pac West, you know how quietly they did it, right? Pac West is now wiped out of existence, consolidated. There's a lot more pain coming than people think, especially if inflation doesn't come back. That'll be a really big problem because that'll mean the Fed is way over tightening, right? That's what a fear here about that. And remember, unfortunately, the higher they go, the worse it's going to be. I'm just telling you. You may want to check out our friends at Y-Refi because guess what? Doesn't matter. Right? Think about just these 2 days. Down almost 300 points, up 200 points. Man, I don't need the roller coaster. I don't want to ride the ride anymore. I want to get off, and I just want a good rate of return every month. That's all I want. I don't want to have to risk it Check out our friends at Y Refi, up to 10.25%. It's fixed. It doesn't change. Doesn't matter what happens. It stays the same. You can turn your income on. You can turn it off. You do have to have $50,000. That's the minimum. You can use an existing IRA. Some of you can use your 401ks. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-Y-REFI-24. And again, the favorite Fed gauge, the PCE and the PCE Super Core, came in at just above 4%. So again, Jason, this number lower than last month. I think we got one more month to lower. I really do, because we do have a lot of big numbers fall off in June, July, and August.
That's kind of precisely why we might see some lower numbers for a while, because they have taken measures to try to control the inflation. And I said, I think it was yesterday or the day before, I've seen some models that show that it could drop well below 2%, maybe even going into negative territory, more of a deflation type situation for a short time. If you look at the CPI year-over-year chart, there are, back in 2015, there was a handful of deflationary numbers, negative 0.8, negative 0.6, negative 0.8. So it can happen, Joe. But here's the thing. I think the Fed is tailoring their behavior towards what happened in the 70s. And I don't think that Paul Volcker, who had raised them and dropped them and raised them and dropped, they don't want that behavior. I think they feel in a modern economic situation that's going to make people feel really ill and sick. And I think people are a little more sketchy and worried than they were in the 70s. So I see some low numbers. I think it can absolutely happen. But I think what will eventually happen is when this recession hits, instead of lowering rates, they're going to pause, and then the inflation will come back, and then they will raise the rates again while printing money. And this will tell you if they out loud print money and they leave rates or have rates go up because of inflation coming back, then just wait and see what happens to gold then, right, Joe? Printing money and raising rates. That's going to be 2024, Joe.
Wow, that's the death knell, right? I mean, that's really something where that's probably, you know what, you're probably right, because that's probably the last thing left, right? That's probably the last thing left in all of the things that they've done. In this report today, they have some interesting stuff like service sector inflation, right? So you take service sector, because we're a service economy, ex-shelter, that one's still pretty high. So that wasn't a great number in this report. Wages was also not a great number in this. But like I said, the headline number was down. The Americans' income rose, but that was less than expected at 0.3%. Fortunately, they're saying spending 0.5. So you do the math. Hey, you're losing a couple of tenths every month. And that's kind of the trend that we're seeing, right? We're seeing that trend where, hey, they're almost making enough money. Not quite. And it's a little short. But, again, overall, the savings rate, that's another one we're watching. It slowed again. It fell again. And like I said, the wages. This one rose. Wages rose for the fourth straight month in a row in this report. So, Jason, there was a little bit of everything, right? The headline number looked good. The markets liked it. The devil's in the detail, said kind of a mixed bag.
Kind of a mixed bag. And that's a lot of the numbers coming into this week, Joe, have been very basically, hey, they're going to raise for a quarter point. It was pretty obvious they were going to raise a quarter point. And now a lot of the information is showing maybe a little more, early on that there's a pause coming. But mixed information, right, Joe? We got to get all the information. I think eventually it'll come down to the CPI year over year, which that's going to be key to whether they're going to raise or pause. And if that number keeps shrinking, then we may finally be on a long pause cycle until the inflation comes back, because the recession's coming, and instead of lowering rates to zero this time, their biggest fight against it's going to be print and give money out to support people, because I don't think they're going to lower the rates. I think they know that the inflation will come back when the printing starts, and they don't want to be at zero the next time, Joe. They don't want to be at zero next time.
Yeah, and I'll just say this: let's go with long pause. If we get the long pause, which is what's expected, then we're going to have a very strong close of the year in the precious metals market. We'll have a very strong close of the year on the equities markets as well. Let's not kid ourselves, right? We'll be in a situation if this is that, right, where, hey, we're going to have, let's just say, the 90 more days of lower inflation in a long pause, right? No hike. Now, yesterday the data said hike, hike, hike. Today the data says, well, maybe we can still wait. Now, again, we got time. We're going to get a whole nother round of this data before the Fed has to make another decision. But if it's what Jason just said, I'll stick to it. We will have record high gold prices before the end of the year. And again, silver with a 3 in front of it instead of a 2 in front of it. Very possible if all of a sudden the Fed doesn't raise rates for the rest of the year. And I'm not talking about lowering rates. I'm just saying if they just don't raise them.
Right. Right. And if that CPI year over year is 2.6 this next go around, or even lower, I don't see why they're going to, with all the other information coming out, why they would raise rates again, Joe. So it's going to.
Possible. I like that call. I actually like that call because of the fall off in the year over year numbers, we could see them. Because remember, the last CPI, the headline was 3, right? 3. Right. We're going to have some big numbers fall off the next time. Could we get a number in the high 2s, let's say, even mid 2s? That would definitely say no pause. That would definitely say no pause. And again, we'll see. Now, there's other things, right? Today, gasoline prices up 13.5 cents, the highest price in gasoline in 8 months, right? So all of a sudden, here we go. Now, the problem was year over year. Listen, last year, gasoline was near $5 here. Well, now it's $4 here. Well, it's still, 4 is still less than 5. So the year-over-year number will come down. The problem is the month-to-month number goes up.
What do they know that we don't know? Because I think they know these numbers before they come out. Because I'll tell you this, if CPI year-over-year is 2.6, which I think that's the number I'm looking at, because the drop-off last year went from 9.1 to 8.5, so that 0.6% drop-off. So for inflation to go up, there would have to be a tremendous amount of inflation coming up, and the trend is down currently. So it would say we get 2.6. Well, that's a pause number in my opinion. But if oil right before the announcement of the CPI is $100 a barrel, in the next week or two it just skyrockets up. Well, then you got to think in less than 6 weeks, maybe they raise it again. I mean, I guess there is a lot of factors, Joe. If oil just takes off running, then that's an inflation number that they may ignore the CPI year-over-year number.
Yeah, and I don't know. I don't know that. I think you're right. I think our initial reaction to all of this is, yesterday I was talking about, hey, all of this data says rate hike in September, but that's just if you focused in on that data point. When you focus in on what the Fed is saying they care about, which is their fake inflation numbers, I think there's a pause. And you know what, Jason? We could get 2 pauses. And you're going to see that. Look at gold and silver today. Right now gold's up 16, right? Silver's now up over 24, closing back in on $25 here. Because just pausing is enough. Wait till they actually say the end. Now, the question will be, does inflation come roaring back? There's a lot of people out there, and I think, Jason, that's probably the camp I think that's where you sit. That's where I sit, right? I think we're going to have, and it's not fake. Some really big numbers from last year fall off.
Yep.
So, yeah, they're going to be down. But the problem is, at least in the way I look at it, we got real lucky on oil, real lucky, and now we're not. By the way, record oil demand out of China and India. All of a sudden, those two, China is doing a lot of stimulus. Listen, their economy's got problems, but they're in stimulus mode, right? They're cutting rates, they're creating money, right? They're doing that kind of stuff, and that's something where that's new too. We've never had an economy as big as China doing stimulus. Well, we're not doing stimulus, and that kind of throws it off, right? Because hey, we don't care. So what? Germany did stimulus or Japan did some. We don't care. Those economies aren't that big. China's big enough to really move that needle. And so it's going to be very interesting how this plays out. But I think I'm more convinced today that we're going to get a pause, which means gold and silver over the next 6 weeks are going to have a run. Stock up on it while you can. 800-951-0592. $800-951-0592. Joe and Jason, Patriot Radio News Hour. And again, new higher lows yesterday. A good, strong rally. And silver really kind of rallied towards the end of the day yesterday, continuing it today, up about 15 more cents here, $24.50. Silver is up $15 right now, $1,961. And the data points that we think that the Fed cares about, which we think is going to be really, all the other data points are probably noise, GDP noise. The retail sales noise, right? PMI, noise, service sector data points, noise, Empire State, noise, right? All their other jobless claims. I think you can throw all those out. I think it's going to come down to the inflation data as to whether or not there's going to be a hike in September based on today's number and the numbers that are going to fall off for the next report. I'm really, really in the mode of there will be no rate hike, and potentially there could be no rate hike at the following meeting after that. That one's a little tougher. But I think for right now, unless there's some dramatic thing that we don't see, I actually think we're going to see gold back above 2,000, going back at that running at that record high, and we're going to see new highs in silver for this year as well. Right now, $10 liberties. Got a good little package here for you. $10 liberties, 1 through 9, 1,085. So we're going to say $15, and gold's up 15. So really, I mean, think about it. That's up $30. That means $10 lib pricing, really, right? That's $15 higher. So really good opportunity here at 1,085. Buy 10 or more, 1,080. Make it a little better for you. Yesterday we ran all those silver eagles. We sold out. We got some good information from the Bullion Bank today. He said, hey, you know what? I actually had 15 extra rolls. He threw them in from what we bought, because we just told him yesterday, we'll buy them all. So I've got 15 more rolls. I don't have cases, so no case discount. I got 15 rolls of Silver Eagles at $630. That is I don't need to tell you. I already told you how great of a price that was. And then silver $half, if you want something. Hey, I don't have $630. I get you. I feel you. I got silver $half on sale today, $225 on silver $half. So, Jason, you can pick. But here's the funny thing. $half premiums and Silver Eagle premiums, they're actually about the same. Matter $half, they're actually cost a little more per ounce right now, but they're still both way down.
Well, Peace dollars and Morgan dollars have had the really high premiums for a long time, Joe, because you just can't get your hands on them very easily. That's what premiums are. It's about accessibility. And half dollars are moving into that realm, I think. And as no matter if we have good gold selling or lower gold selling, metal selling markets, at some point there's just so many of the pre-64 silver out there. And I think half dollars are just moving into that range where Silver Eagles are being minted every year. It's a great way to buy high quality, pure silver. But for that utility silver, that pre-64 stuff, the $half premiums, that might be one of the things that sticks, Joe, is even with the premiums coming down and everything else, seems like $half are gonna be a little tougher to get. It's a good thing to load up on, really, because I think they're really cool coins anyways. All of the patterns, the Walking Liberty, the Franklin, and the Kennedy, probably the best of the patterns of any of the coins you could buy anyway. So big fan of $half, Joe.
Yeah, and remember, we don't do any sorting of that. They like to give you all Kennedys or all Franklins and leave out the walk. We don't do any of that stuff. So you're going to get a great variety in those $half rolls. But again, I think it's all about inflation. And here's the part, because it feels like a trap, doesn't it? It feels like a trap where Schiller yesterday, Case Schiller, housing. He's like, housing prices are going back up again. I don't know. I mean, that's what his data says. And it, okay, you're right. I'm like, okay. Gasoline prices, oil prices are going back up. The power bills this month are going to be brutal. Because not only has it been super hot pretty much everywhere. Okay, pretty much everywhere. It's the demand. And when you have demand this big, what happens? The price goes up. So normally you may be like, well, my normal, like here in Arizona, it's not uncommon to have a power bill $300, $400, $500, $600, depending on the size of your house in the summer. They could easily be up $100 to $200 more. And again, I don't know, how does that factor into the inflationary stuff? All of these things, it just feels like because of the big numbers falling off, at least for me anyway, I think the window is open for a pause in September and then a pause at the next meeting. I think the next meeting, if I'm right, and I could be wrong, I got to look, it's either the end of October or early November. Jason, we can get double pauses here, which would really, I think, drive both the equity markets, gold and silver, crude oil. That's almost inflationary in itself, isn't it?
Yeah, well, commodities are a great way to monitor inflation, and gold, and in most inflationary situations, gold will sometimes be a leading indicator, not a lagging. So a lot of times, like, with the coronavirus emergency, and gold shot up, but it hit its high in August. So you look at, well, the emergency hit in March and April, and people were freaking out. But transitory started 2021, Joe. Gold went up before transitory, which was inflation in 2021. So, Joe, if we're going to have 2024 inflation, which I think we will, you're right about gold heading upwards at the end of this year. So, yeah, the pause that's coming sure looks like inflation in the future means gold would go up this year and early next year. So keep saying this is a great time to be buying, Joe. This is a great spot to be in.
I'm going to tell you, there's other things lurking. The banking crisis. So right now, the FDIC, the Federal Reserve, they're looking to tighten standards. I'm going to tell you what that means, especially for the mega banks. It's kind of interesting, the timing on all of this. Is this one of those things where it really takes a bigger bite out of things than people realize? I'll talk about that next. 800-951-0592, $10 Liberties, 1 through 9, 1,085, 10 or more, 1,080. We have a few rolls of those Silver Eagles that we ran yesterday at $630. We only have a few, then they're back to the $660 price. And then also on the silver side of things, rolls of silver $half at $225 at 800-951-0592. You know, think about some news that came out this week. One, the FDIC saying that banks were deliberately underreporting the size of their uninsured deposits. Of course, why would they do that? Well, that's simple, because they know they're a target, right? Banks with high rates of uninsured deposits, especially if you're not a mega bank, you're a target. And then the other side. So the FDIC is trying to come out and raise requirement, make it what happened with Silicon Valley. They're trying to prevent that from happening again. And right now, it appears that they are going to force banks, especially the bigger banks, to raise those capital requirements again. And not by a little bit, by as much as 19%. So that is going to be a huge issue for banks, especially at a time when we need these banks to be buying all these treasuries, and yet the Fed say, wait, you got to raise the capital requirements. And of course, I thought they solved that with we fixed it with too big to fail. No, they didn't. Because all they did is they made the banks bigger. So guess what? This stands to reason. Doesn't that make perfect sense? Oh, wait a minute. We got to raise the capital requirements now because we made these banks even bigger, Jason, so it makes sense. Dude, you got to have a lot more money aside.
It's a Ponzi scheme, and usually at some point during the life of that, it comes to an end. You know, it's not immortal. Ponzi schemes are not immortal; they are mortal, and they do die. And anything that the scheme can do to make you trust what is going on, the more you'll continue to invest and be inside that system. And Joe, the banks have to get bigger, right? There has to be more control. There has to be a digital currency. Gold shouldn't be in the money system as of 1933. Silver couldn't be in the monetary system as of 1965. Even copper pennies were taken out in 1982, and now their own paper is too expensive to have in the system. They need to get all of their paper out because you holding their paper hurts their Ponzi scheme. When I can see gold, you throw a lump of gold or silver at somebody, it's going to hurt, right? But now what's going to hurt the Fed now is throwing paper at them. That's what hurts them now. That's how weak they are. Now paper hurts them.
Yeah, the Martins, Wall Street on parade, another great job by them. They dug into the mega banks. Because we know about these smaller banks and uninsured deposits. They just took J.P. Morgan, and they took J.P. Morgan's own data. Right? Because nothing better than taking somebody's own data to prove your point. They talked about how J.P. Morgan has over $2 trillion in deposits domestically. $2 trillion. Think about that. The FDIC doesn't even have $100 billion right now. But don't worry. Right? Don't worry. All the money's insured. Don't worry, right? Nonsense. They said that they also hold another $420 billion in deposits in foreign offices. Which, by the way, and any foreigners that had money in Silicon Valley, they found out the hard way. Your deposits are not insured by the FDIC. So that $420 billion, that's all uninsured. What about the $2 trillion at home? According to J.P. Morgan, $1 trillion of it, so half, is uninsured. And again, this is why I keep telling you, please. Now, people are like, well, gosh, why are all these people having over the insurance amount? A lot of this is businesses, right? They have no choice, right? Even Apple, who, believe me, and I tell everybody, Apple doesn't keep their money in the bank. No, they got to Apple's got to make payroll and all that stuff. So Apple's payroll is more than $250,000, right? We know that. So Apple, they may have $10 million in the bank. All the rest, but you're like, Apple reports earnings. Apple made $5 billion. Yeah, guess what they do with that? They buy treasuries. That's what they do. And they buy U.S. treasuries, Chinese treasuries, European treasuries, but that's what they do. They don't keep it in the bank. They keep what they have to in the bank. So it's not as if the everyday Joe guy is carrying $500,000 in it, but J.P. Morgan, of their $2 trillion of deposits, almost $1.5 trillion of it, Jason, is uninsured. That's actually worse than a lot of these banks that we've been worrying about. This is a big problem.
It's a big problem, that's for sure. And as we've been talking about, the Fed's trying to turn over half of their debt, right? You got to get that lower interest stuff off the books. That's the big problem they have, is because it looks like we're going into a higher rate cycle where we don't go to zero anymore. And so you got to cycle all of that low interest debt that's been piling up everywhere. And banks that are swimming in that stuff are the ones that are crashing and falling down, Joe. And then, never mind the fact that some of them are in commercial real estate on top of that.
You know what's funny? Just to give you an example of the disparity, according to the FDIC, over 99% of deposits at the big banks are under the FDIC insurance, right? Because they got no money in them, right? That kind of makes sense, doesn't it? It's just the rich people. Patriot Radio News Hour. We'll be back wrapping up the week right after this. $800-951-0592. Joe and Jason wrapping up this week here. $10 liberties, 1 through 9, 1,085. 10 or more, 1,080. The last of the Silver Eagle rolls at $630. Take advantage of that. And then, of course, the silver half dollars, $225 at 800-951-0592. By the way, this new bank requirement, this is only for the largest banks. Ready for this? Got to have $100 billion or more. You know how many banks that is? This is how sad it is. 30 banks out of the 4,000 plus banks. That tells you, Jason, that's probably the number the Fed's looking at, right? That's how many banks they really want to have left. Which, for the smaller end of the banks, I'll say banks 10 through 30, they're probably going to have to go borrow at the Fed window even more. They're only going to go up 5%. The bigger banks, that number as high as 19%, Jason.
Well, we played that clip earlier this week, and the FDIC talked about all the problems, right? And this was November last year. And then I also talked about several weeks, maybe a month or two ago, that after third quarter, the big banks and the Fed said that there are problems with 722 banks. That's as of third quarter of 2022. So they're almost a year ahead on this information. They knew this stuff was going to happen. They knew some of the banks were going to show problems like they did in March. So it's coming for sure, Joe. It's absolutely coming. They knew this stuff was coming. And it just look, it takes us how many months before we get some leaked information that the FDIC is like, well, you know what? We all know it sucks, but just don't let anyone else know about it. And the Fed's like, yeah, there's 722 banks that are upside down. That's a lot of banks, Joe. And it was over 550 banks over a 4 or 5 year period that died in the 08 crash. So even though there's less banks now, I don't see where we don't have 700 banks fail possibly in this next cycle.
Yeah, fail, consolidate, right? Whatever word you'd like.
Disappear.
Right? Whatever word,
disappear.
Yes, whatever word you'd like to use, a la Pac West. But again, and you know what? We didn't even talk about the Bank of Japan today. By the way, interest rates in Japan, listen to this, skyrocketing to Remember earlier in the week we talked about the yen may really go on a run. So the Bank of Japan having to intervene in the markets and allowing Japanese interest rates to rise. Of course, Japan's got the same problem we do. They can't even afford to pay 1% on their debt, Jason. Obviously, we're struggling here paying 4%.
Yeah, Chinese debt to GDP is pretty bad. it's pretty bad.
The Japanese, they're worse than us.
Yeah, and it's because, let's face it, they had a pretty good economy for a while there, and then it just sort of broke in the 80s and went sideways. Why have they been just sideways for 2 generations? That's because they don't have the world reserve currency. That's the whole point here. America's losing their full dominance of the world reserve currency. I think we're going to end up with a world reserve currency as a basket of currencies, and I think it might be special drawing rights with the IMF. I really think their digital currency is going to be the worldwide currency that we end up using, Joe. And remember, they rushed China in when China didn't even qualify.
I can't argue that. I think that is a logical assumption on that. 800-951-0592. Jason and I coming right back with the half-empty cup, wrapping up the entire week. God bless.